All right, well, welcome everybody to the Advance Your Wealth video series and podcast. I'm excited to have a special guest joining us today, Sean Conrad from Epic Brokers. And we're going to be talking about a really important topic that I think has been even more important considering what we've been through in the last year or so with the pandemic. And that's a topic that I think a lot of people might just put on the back burner and kind of ignore every year as they just kind of get the renewal notices. But it's all about commercial insurance and how you really should be thinking about commercial insurance today, and what are some of the key mistakes that people often make that lead to outsized liability issues that can come up. So Sean, thank you so much for joining. As a start, maybe just give us some background on yourself. How did you get into this commercial insurance world, and what are some of the, I guess, things you're starting to see today that are important to start this conversation?
Yeah, well, Homer, thank you for having me. It's great to be with you. I love the work that you're doing and putting all of this great content out online. So it's fun to be here with you and to contribute something to that. How I got into this space, really, I've been protecting people and things for a long time. I think this started back when I was in high school playing football and being on the offensive line and protecting a high value quarterback, being the oldest of four kids in a family and protecting as the big brother. So I think I've always had that by nature. When I got into business, I really fell in love with the entrepreneur and the business owner. I personally believe they're the engine and the lifeblood of the economy in this country. And if I can do with my teams, if I can create an environment where they can take risk, put capital to work, hire people, grow their companies, they're impacting the community, that's what I want to do. And that's what I take the most satisfaction in, is being able to use my industry and the products and services I have access to create that environment where they can go out and do what they do best, which is be creative, grow a product, grow a service, and really make an impact in this world. So that's the lens through which I tend to see the world. And I love the work that you're doing with business owners. And it's going to be a fun conversation today.
Yeah, great. And I think that's a great point how you frame that, because I think a lot of people see a relationship with their insurance broker as very transactional, and that they're just looking for maybe the cheapest rate and let's just get this done and get it, check the box. And you sound like you have a much different approach to working with the business owners you work with. Can you maybe share more how you approach that, how you think about that?
Yeah, I think unfortunately, the financial services world has trained a lot of people, business owners included, to think transactionally, think product, everything's the same, it's commoditized. And I think you and I both know from our own respective disciplines, that could be, the furthest thing from the truth. There is so much difference in terms of products that are available, how contracts are put together. In our world, we sell something intangible, which is an insurance product, but it's in some ways the most concrete thing somebody can purchase. It is a contract, a promise to perform in the event of a claim or a loss. There are a wide variety of ways insurance companies structure those. So working with a good advisor, whether it's in your space or mine, is critical to understanding what is the risk around that business. And I'm looking at it from the lens of what could really take that business owner out, the worst case scenario. And then how do we pick good partners on the insurance company side that have quality contracts that protect that business owner from worst case scenario, and that are also good partners with us when the day-to-day claim activity comes up. Again, it's all about creating an environment where that business owner feels protected and they can go out and do what they really need to focus on, growing their business, growing the economy in their local markets.
Yeah, that's great. And I think our world, the wealth management space, they think of us as focusing on investments. And there's a lot of things we can do around protecting a client's investment portfolio, but most of my clients are business owners and real estate developers. And so most of their wealth is in this illiquid asset tied to their business or tied to real estate. And so it's one of those things that I've been learning a lot more about. And I'm excited to talk more about this with you, because their risks are much bigger in their business than they are in their investment portfolio that I'm managing. So I think this is such a critical conversation to be happening. So what have you seen in the last years? We've been going through COVID. What kind of risks have either been magnified or changes you've seen in the market that are impacting business owners around their commercial insurance?
Great question. This year, and I would say that as we went through 2020, has created more change than we've seen probably in the last 15. And I'll tell you why. So the commercial insurance markets as a whole were underpriced for about 10 years relative to the risks that were out there, the claim activity that was being driven by those businesses. COVID brought all of that to the forefront. And what we're seeing now is rates and projected trends where we're seeing prices that are matching the highs we saw back in 2003. So for a lot of business owners who are looking at the cost of running their programs and saying, wow, This is up 20%, 25%, 100% over the prior year. And that's one aspect of it. So cost is one thing. And it makes sense if you peel the onion back and you think about it from the seat of an underwriter in an insurance company trying to price what is the risk around this account. They're seeing losses on the horizon, losses that are developing, some of them COVID related, some not, but they're starting to see losses on their book of business. And they can't create meaningful investment returns in the marketplace in a very low interest rate environment. So something has to give in that formula. Reinsurance rates are also becoming more expensive. So premium for those business owners is starting to rise across all lines. So that's been across the board, something we've seen very consistently. COVID has created some other interesting challenges that are new. That is, a lot of companies took employees and moved them into remote environments, whether permanently or temporary. That creates all kinds of other complications. I've got a couple of clients I'm working with on some issues like that, where employees scattered to 16 different states, and they realized, wow, we have to, payroll taxes are being paid in those states, and we have to inform the workers' compensation carriers that those employees are no longer in their what was home state of California, for example. And so those nuanced things that you have to work through with clients are interesting, and some of those are new because of COVID.
Yeah. So given all those changes and what's going on, my sense is you would agree with this, that, really the starting point every year for a business owner should be doing kind of a comprehensive review of their overall situation and incorporating in and having these types of conversations before we get to an event like a COVID that drives that. So how do you think about that? And how do you see you and Epic fitting into that kind of a conversation?
Yeah, so I think an annual review is something everybody should do, whether they work with us or work with their existing provider. And I say that because a business environment is very dynamic. Companies are growing, they're shrinking depending on what industry they're in their own reality. So that drives exposure base, which drives premium in our world. So it's very important that they have a very open, honest dialogue with their insurance consultants and advisors around what's happening with the business. And then give them a peek into the future. Do they plan to expand? Do they plan to acquire a competitor? Those types of things are really important. And you don't want your insurance advisory team to be reactionary to those types of moves. The more we know about a client, their current operations and their intention, the better equipped we are to make sure we're looking at everything from a very 360 lens, and we can protect them and anticipate where there may be some issues we need to solve for.
Yeah, I think more than ever, maybe not more than ever, but I think I'm really seeing the benefit of really a collaborative approach across all of your advisors, and kind of to your point earlier of the team being so important, and having everybody looking out for the best interests of the business owner. And again, even for me, admittedly, I mean, commercial insurance is one of those areas that I've just kind of not touched because I didn't understand it that well. And getting to talk with you more in the last 6 months has really opened my eyes to how much risk is really sitting there and how important it is that I roll my sleeves up and find the right people to come in and do that review and identify what risks are out there. So I think that's a critical point.
I agree with that. And the last point on that too is when the market is very stable, there is probably a lesser need for this. I'm stressing it now because the market is so dynamic and has changed so much. Again, whether you look at it from a rate perspective, from a carrier appetite perspective, there are insurance companies who are looking at their books of business. As I said earlier, they're looking at losses. They're trying to decide what they want to write, what risk they want to get off of. And so this is creating a very dynamic environment for clients. They're also, in many respects, changing contract terms when they offer lines of coverage like directors and officers, employment practices, which we'll get to in a minute. So those types of things have created a lot of change. And anytime there's change, I think it's a great opportunity for clients to say, we should probably have a full conversation around what's happening with our business, and then have the advisory team inform them about what's happening in the marketplace. And I agree with your point of collaboration too. And I think this is critical because if you don't know anything about your client's insurance and risk management programs, you have a plan for them financially that could be impacted by what you don't understand. Or work product that isn't up to par, and an uncovered claim could change everything for that client overnight. So I love the ability to collaborate with people like you, because we need to be in lockstep of what is the client's ultimate vision for their life. And that business owner has a life outside their business. They're going to sell it at some point, transition out of it at some point. There will be a moment in time where they are not operating that any longer. but a lot of their net worth is wrapped up in that. So we want to protect that as much as we can. The more we know about where they're going, where they're headed, the better.
Yeah, and one of the things I realized is, because I didn't understand this world super well, you just kind of assume those professionals are taking care of the business owner, and that and it's not that they're not trying to do the right thing. They just, again, to your point, they may not have reviewed it well enough. The insurance agent may not understand where the business is headed, or some of the changes that have occurred. And so I just recognize getting involved and getting my sleeves rolled up and being a part of that process has become more critical. And so I 100% on that. So looking at some of the, not just in a pandemic situation like we've seen, but just generally speaking, what are some of the key coverage issues and mistakes that you most often run into when you guys do these audits and full review of a commercial insurance? What are some of the key ones?
I think some of the key ones I see, and these are sort of frequently noticed items, I see clients that have purchased coverage lines haphazardly or as needed, and you end up looking at a business that does a couple $1 million a year, and they've got 6 different policies. They all renew at different times with different carriers. There's just inherent messiness and inefficiency in how it was put together. They might even have multiple brokers. And you ask them, how was this put together? And they'll tell you, well, it was just sort of piecemealed over time.
Yeah.
And we like seeing those situations because there's an opportunity to add value and clean it up. There's also a lot of risk there, quite honestly, for the business, because things are in disarray. They're disconnected. There isn't strategic thought around putting it together. And that creates coverage gaps potentially and those uncovered claims. So I always take a lot of satisfaction out of knowing we have consolidated everything. We have a very complete look at what we're covering. Yep. And that business owners can then take that confidence away knowing, okay, I've solved that problem. And now I can move on with life and growing the business. So that's probably one of the things I see most often. The other thing I see, if you want to get into coverages specifically, is I tend to see, maybe less of an emphasis than there should be on, I would say, the executive lines. Directors and officers or D&O coverage is incredibly important for any private business. Oftentimes that goes overlooked. Employment practices liability, or EPLI, is critical for a small to even mid-market size business. If they don't have protection in that area, this is going to protect you from wrongful termination claims, harassment claims, sexual harassment type of issues. Those claims, when they occur, are big, and that can wipe out or dramatically change the trajectory of a company. And there's a reputational risk component to that as well. So that's an area that's often overlooked by business owners if they've just pieced together things they have to have in place to get a line of credit from the bank or other things. But that's a part that we want to spend time on and make sure that they understand we can protect them and transfer that risk to an insurance company just with that full 360 kind of conversation about their operation. So that's a critical part, in my opinion.
Now, I know there'll be more that we'll jump into, but in your reviews, and maybe this is hard just off the top of your head, but what % of the time do you see those two, that directors and officers and the EPLI? How often do you see that that's not adequate in the reviews that you guys do? Is that one of the most common?
I'd say it's over half.
Yeah.
It's one of the most common. It's over half. And I'll tell you right now, because the market environment is changing a lot, you're seeing D&O rates have gone up dramatically. And it makes sense because underwriters are looking at the horizon. They're saying, gosh, we have a lot of bankruptcies coming, a lot of, distress situations coming. We're going to price that accordingly. And the other thing that's happening is they're changing some of the contract terms. They're putting more risk back on the insured. And so again, every insurance broker or advisor will operate differently. If they don't have a really strong executive risk team, and that's where all of this fits into executive lines, the client's going to be at a disadvantage because they're not going to have the benefit of knowing, what does the market in total really look like? What are my options if I need to shop and look at different insurance carriers? And then I think clients also want some benchmarking data. What are peers in my space buying, or what would a company of my size purchase? So we have the benefit at Epic of having a very large platform and deep specialty in this particular area. So we're well equipped to have that conversation. Others may not be.
Yeah, good. Another thing I've seen a lot, in the news, you see a lot of things going on around cybersecurity issues. Even, in Washington State with the unemployment benefits, there was a massive breach and millions of dollars of claims, left the state, unfortunately. So what are you seeing around that and the risks around cybersecurity, and how are business owners, have they really recognized how big of a risk that is, and how big of a gap are you seeing there?
The second part of your question, I think, was the most important. Are business owners really seeing, because what happens is these big headline events hit the papers, they hit the news. And I don't think the business owner makes the correlation between, well, they're attacking big sources of information. And the business owner can look at that and say, well, that's not me. I don't have something that size, so I am somehow immune from the risk. And that is the furthest thing from the truth. I can tell you from our experience, the cyber criminals out there are pushing just as hard to get into that mid-sized business as they are into bigger institutions. And oftentimes for that mid-market business, they are somewhere in a supply chain selling into a larger enterprise. They are the likely target, quite honestly, to get to the bigger customer. So there is risk all around it for the business owners that you're working with, regardless of industry, and they all have information that's valuable. So I think it's an underappreciated part of the review process. Now, the good thing is, despite all of these high profile kind of activities, there is plenty of capacity in the marketplace to write cybersecurity. And there is a growing appetite for insurance companies to play in that space because they know that this is going to be something that's going to be a growing part of their book of business. So for buyers, it's a great time to look at it if they haven't in the past. And I would highly recommend everybody take a look at that because everybody does have risk. Now, one other point to that, the high profile events that hit the news are often hacking type of events, right? They're trying to force their way into systems and grab information. The more common thing that we see is the social engineering type of play where they're looking at a way to, they'll typically get into a corporate system and sit there for 18 to 24 months and just sort of watch how emails go back and forth in the enterprise, try to pick up language and cadence. And then when they're ready, they will trigger one of these social engineering strikes. And all that means is they're going to pose as the CFO instructing someone to send a wire someplace.
Yeah.
And they are very, very sophisticated and very good at this. So cyber insurance programs can provide protection against events like that. And like with our teams here, we have people on our staff that serve as breach coaches. So if someone does have an event or an experience like that, we can counsel them on this is what you need to do procedurally. And we've been through this before with so many clients that have had their networks, captured in a ransomware type of event. We can coach them through what to do. This would be a very challenging situation to deal with on your own if you have no coverage and you have no advisors around you to help. But every business should have this. It's a target for absolutely everyone.
Yeah, no, it's definitely something that everyone should look more into. And it's, whenever I have these types of conversations with any other professional that looks into businesses, I run my own business too. So it's like, I need to make sure I've got that buttoned up as well. Another area we've been looking at on the individual side a lot and working with your team at Epic as well is looking at individual liability coverage and educating our clients on the risks on their individual side and looking at things like excess liability or umbrella insurance. I'm sure that same need applies to the business side as well. So they have their general liability protection in place. They think they're covered. What's the reality of that?
Right. So great point. And this gets back to our earlier topic of having a 360 look, right? And trying to create an environment where that business owner is as bulletproof as we can make them in their commercial life and in their personal life. And I'm really big on that because they have exposures in both, right? So you've experienced the work we've done on the personal side and building proper excess liability or umbrella towers. We do the same thing on the commercial side. So making sure that that entity is protected. And then you have all of these different coverages, right? When you're putting a business package program together. So you've got your general liability coverages like the D&O and the EPL, the cyber that we talked about. It's also very important on the umbrella layer that all of those, it just flows correctly and that the named insureds are structured correctly. We have, most of our clients have multiple entity names, and the common mistakes I see are more in the vein of there might be an umbrella coverage in place, but the broker failed to name all of the entities on the umbrella, and consequently they wouldn't be covered by the umbrella if there were a loss. So we pay very close attention to detail and making sure that it's structured correctly. And those are some of the little things that I see that could become big things down the road. So getting back to the value of doing a full audit, it's everything from program design, but also looking at how was it actually put together? Were there gaps or just some sloppy work product that was done? And we see that often.
Yeah, great. What else? What are those are some of the ones that I would think of, that come to mind. What are some of the other key areas that you guys are typically identifying risks or excess risks in your reviews, or just areas where business owners can just be doing better at in protecting the business?
Yeah, I think the other thing we haven't touched on yet, but we are actively involved in, is the employee benefit side of the equation. So businesses hire employees, and part of the way to attract and retain the best people is obviously compensation, but part of that is employee benefits. So designing a benefits program for that business is going to represent the communities where they live and work and source talent from, and talking to that business owner and their human resources teams and deciding what role does benefits play in attracting and retaining the best people. Some companies and in certain industries, they need to have a truly stellar employee benefits plan. Think law firms.
Yeah.
That's a big deal to attract and retain the best people. For other industries, they want to be on par, but they don't need to be out in front as the leader. And they may not want to from a cost standpoint. So having that conversation with clients about where that fits into their overall strategy is really, really important. So we get the strategy first, and then the mechanics of actually building the plan is something that we do every day for clients. And I think it's a really valuable part of the overall discussion with any business owner. Yep. It's not just protecting the physical assets and dealing with the liabilities, but it's also your people are probably your biggest asset. That's your human capital. How can we protect them and give them access to great quality healthcare? And then our teams, for example, are there to support them when claims happen and they're having troubles with billing and all the kinds of things that tend to happen with medical plans and people accessing the healthcare system. So I think that's an equally important part of the job that we do working with business owners.
Yeah, I think a lot of the businesses I work with are at some point heading to a transaction, either a transition out of the business and moving on, or a sale of the business. And that compensation opportunity with some of their top people is often missed. And it's a big risk, I think, to the transaction world. And we were actually just meeting with a business owner client who he's in real estate development. He has more deals than he can possibly manage, but he has nobody that can really handle that besides him. So his mentality is, I'm going to do this for a little bit longer, as many of the deals I can, but I'm having to turn away deals right now. And we started going down the road of a conversation around, well, what if we could design a compensation package that would attract the right person that could take over some of these opportunities for you and allow you to step a bit away. So that's kind of the road you're talking about too, as well. And designing compensation plans for top key people.
And I like the way you phrase that too, because it's not just the people you have today, but it's the people you want to attract.
Yeah.
And we have this conversation with businesses often, and you're in a great spot because you're talking. Every business has challenges, right? Every business owner has challenges. Those are great challenges, in my opinion, to have. If somebody is turning away business, they want to grow, there's a missing person that they need to hire. Well, what they're offering from a comp standpoint, a benefit standpoint today may not land that person. But if we know that they need to go there, we can have conversations around how do you create a plan that's going to attract that right individual. So I love working on those types of problems, and those are fun problems to solve.
Exactly.
And the benefits package is an important component to that.
Yeah. And so in line with the benefits package, another area that we see often overlooked, I'm guessing you see it quite a bit as well, is, when we're doing our reviews with business owners, we ask them, let's see your operating agreement, your buy-sell agreement. And if they can find it, oftentimes we find that if the buy-sell agreement's there, it's not funded. And so what kind of risk does that create for a business if they've done the work to kind of put a plan in place to have business continuity, but they didn't really cover the financial side of how they were actually going to kind of put that into actual action?
Yeah, I mean, huge risk. You guys are having that conversation with clients all the time. It's something we'd want to be brought into as well, just to have an understanding of what the transition plan is for the business. And then there's going to be, we should talk about transition too, whether it's going to be a sale of the business. And, we want to protect every step of the way, protect that business owner and their nest egg, their net worth, right? So, we have the transactional risk capabilities to put around a deal too. So you talk about somebody says, I'm probably going to sell this thing in another year or 2 years. We want to make sure they're familiar with reps and warranties and the role that will play in a transaction. If there are tax or legal challenges that are tied to the business, can we use the insurance markets to put a wrapper around those and remove those from the balance sheet and make sure that we clear the path for a deal? We do that every day. Yeah. So those are parts of the deliverable and strategy we want to bring to the table well before it's needed. So clients know, okay, that resource is there and we can tap that when we need to.
Yes. So staying on the this idea of a transaction, right now that a lot of business owners are looking at that. I think whether it was part of the plan initially, maybe it was from '08, they'd meant to sell and the market didn't work out for them. So they've had to hold on for 10 plus years and now they're ready. And then they hit March of 2020 and they survived and now they're ready to sell. But a lot of them took PPP loans and other things from the CARES Act. And maybe when they took that, they didn't understand all the implications that might have on a transaction. So tell me about the work you guys have done to address that situation in the market right now.
Yeah. So I know you have a lot of those business owners who probably looked at selling at different points and now they might be ready. And then they did borrow from the PPP program. So we saw this as an opportunity. And this is the same team that will do all of the reps and warranties placements and that transactional risk team. We went to the markets and said, look, we think there's an opportunity here to create value for customers that did take loan proceeds and are concerned about the SBA audit risk. And that window that the SBA has to go back and audit is 6 years. And so for a lot of businesses are thinking, gosh, I'd like to sell, but I've got this SBA audit risk hanging over my head. Can I deal with that in some way? So we went to the markets and created a facility where if somebody borrowed $1 million or more, we have the ability to put an insurance wrapper around that transaction. So we basically put a limit together that matches what they borrowed from the PPP program. Let's say somebody borrowed $7 million, we can put a $7 million limit in place and put an insurance wrapper around it to protect them against the audit risk from the SBA.
That's great.
And so we're the only ones that have done that. It's really pretty interesting. It's been hugely popular, as you can imagine. People want to know more about it. And we actually had our markets that do this for us put more capacity into the program in early 2021. So that market is open. It's available. If people want to learn more about it, they can certainly connect with you or I. We can walk down the path how it works.
Yeah, I think that's important because, at 6 or 7 million, that could be a significant chunk of a transaction that has to be escrowed for 6 years. So having the ability to maybe pay a small premium to not have that risk on the table and take those dollars at the transaction is going to be a big deal. And if not, it's going to be a shock to that seller that all of a sudden that what they thought was coming to them for their retirement is now stuck in escrow for potentially 6 years. That's not a good outcome.
Let's go deeper on that too. And let's use my example of 7 million. So if you borrowed 7 million, how much would we put into an escrow account in a transaction for that risk, right?
Yeah.
It's a big dollar amount. It's going to sit there. So for 5% of that, we can put an insurance wrapper around it that would cover that duration, that 6 year period of time. So you're talking $350,000 to put an insurance deal in place around that risk. It's a far more effective use of capital. And so that's why we like it. And that's why the market has responded so favorably to it.
And then have the buyers been comfortable with that versus the escrow? Have you seen that been?
Absolutely. Yeah. Absolutely. They see it far more efficient use of capital. They can sort of solve the problem now and be able to know with certainty they've got protection against that audit risk. Now, the other thing that goes along with that is I don't personally think every industry is going to have the same amount of risk from an audit perspective. I have some clients that are high profile that have done incredibly well financially post COVID and all the shutdowns. And by virtue of that, they could be a higher target of the SBA saying, did you really need these proceeds? Now they applied for the program under the rules, did everything correctly, and believed at the time that they needed those proceeds because there was so much uncertainty in the environment. The SBA is going to make some decisions, I think, on how they deal with audits and who they choose to pursue. So it's not going to be equal and everybody doesn't have the same risk around that. But I like the fact that we have capacity in the marketplace, a way to solve that problem and do it in a way other than using escrow accounts.
Yeah. Cool. That's a really neat program. And I'm really glad that you guys have put that together and that we found out about it, because it's definitely a conversation I've had with a few business owners and investment bankers that were very interested in that as a solution for their owners. I want to go down one more road with you, and I want to start it by saying, it's a unique world we're in now in the market, and all of these things going on with SPACs and things of that nature. And I want to start by saying we're not recommending anybody go invest in SPACs necessarily, but because those are out there and they're becoming a popular funding vehicle, they're just another way someone could raise capital, whether it's an IPO or or a private sale, SPACs have become a vehicle people are using. And so, it's kind of it seems to me, or it sounds like it's been a bit of a wild, wild west world out there with them. What have you guys done at Epic to help businesses take advantage of this opportunity to raise capital, but do it in the right way?
Yeah, so this is a topic in the news every day. I think it's fascinating. I can tell you, our teams were involved in over 20 of these last year. I have 2 of these going right now, a client that did one last year. So I think it's fascinating. I've had probably more exposure than most to it. I think I can give you a couple of things that I think are really critical. One, you have to have the right legal team in place. We have the benefit of some relationships with firms that have done this at scale and done a lot of these. Getting to the right people is critical if a business is serious about considering it. So that's step 1. Step 2, same thing, connection with the right investment bank who can fulfill that. And again, we've got relationships with people who, according to all the league tables, are top, 5 in terms of doing SPACs and are very, very active in this space. So getting to the right people, I think, is one of the biggest challenges up front for somebody who's seeing this in the news saying, I may want to participate. So, we have the benefit of having those relationships and can guide someone down that process more efficiently than most. The other thing from an insurance standpoint that's important for people to understand is there is a D&O impact to this when you decide to use the SPAC as a vehicle. So you're taking a company public, you're going to have a public D&O placement, and the existing D&O coverage has to be put into what's called runoff. We can handle all of that within our facility. And again, the fact that we have done so many of these is an advantage to any business owner working with us. So I think the model's fascinating. I think this will have, a long runway, at least through the rest of this year and into 22. I think this will continue to be very, very popular. I think if clients can organize themselves around the right advisors, the right relationships, they can assess if this is going to make sense for them or not. And then just know there will be some, from a risk standpoint at least, some unique features to it, particularly around the D&O that will need to be addressed too.
Cool. All right. That's a lot of stuff we covered in a pretty short amount of time. Anything we missed that you think would be important to business owners that might be watching this around their commercial insurance?
Anybody that is listening to you, Homer, I think they're already in a good spot because they're looking and seeking good advice. And so I would just stress, work with the advisors that you think are going to add value, that understand who you are as an individual, where you're going with your business, what your ultimate objective is, and that can collaborate with people outside of their wealth management firm to make sure you're protected. And that message of who you are, what your goals are, is communicated across to all the advisors that are touching you. I think that's the single biggest take-home point I would leave anybody with is don't treat your advisors as disconnected entities. The more people, they may not work for the same company, but the more that they are aligned around your common goals and objectives, the better. And we are all here to serve the business owner community. Again, I think it's the lifeblood of the American economy. I'm a big believer in the entrepreneur, and I want them to succeed. And I think they can have their best shot at that if they have really good advice around them.
Great. So obviously, if any of you watching want to have an audit done on your overall commercial insurance, obviously you can feel free to contact me. We'll get you in contact with Sean and his team. But Sean, for you directly, what's the best way for people to get in contact with you if they want to reach out directly to you?
Yeah, appreciate that. Find me on LinkedIn at the Sean Conrad, Instagram at Sean Conrad, epicbrokers.com is our corporate website. So check us out any of those places, and prefer to connect with me directly or through Homer, and I'll be happy to help you.
All right. Well, thanks for joining us today, Sean. This has been really enlightening and also scary at sometimes as well. But look forward to taking advantage of the work you guys are doing and better protecting our clients. So appreciate your time.
I enjoyed being here, Homer. Thank you very much.
All right. Thank you.